Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to be doing a result review. A corporate company which is heavily involved in the infrastructure sector has been garnering attention from the perspective of orders, also has registered stupendous growth in the recent quarter. Let me now welcome the management of Skipper Limited, Mr. Sharan Bansal, to the show. Sharanji, welcome to the show.
Hi, Piyush.
I think the quarter has been phenomenal because we have seen the PAT has really registered strong growth. There also has been very good revenue growth. Uh, First of all, I think since the company is working in the infrastructure sector, help us understand, was this strong revenue growth a function of execution of the previous orders, or there was sort of some I would say later stage of the order executions? What was the result of this growth? What are the
Yeah,
reasons?
sure, Piyush. Sure. So, sorry, please go ahead.
No, I was saying just what is the reason of the growth?
Okay, sure. Yeah, so firstly, thank you for having me, Piyush. I think, what we've been saying is that power transmission and distribution has seen a very strong revival since last year. There was a period from 2017 onwards, right up till 2021, towards the end of COVID, where there hardly was any investments happening in power transmission because for pre 2017, all the investments were catered much more toward the thermal based generation, which had reached a saturation level. What we started seeing, in the last few years, is that a lot of large projects in transmission coming up to cater to renewable sector, and this is a reality not just in India but almost everywhere in the world. We
Globally.
operate in about 65 countries, and we are seeing this trend in a lot of countries, where even including developed countries as well. So where countries are trying to move away from fossil fuel based generation to renewable generation, either wind or solar. And that is leading to a lot of demand in the power transmission and distribution space. That's a trend we are seeing globally. India has been a little late to catch up to this party, and I think what we have started seeing is orders have started flowing in just in the last 7 to 8 months. So that's essentially the story. The other sector which has been doing very well for us has been telecom. Thanks to the 4G, then 5G, and hopefully 6G coming up next year. There has been a lot of momentum in the sector, and a lot of demand has been coming up. Government has also been through BSNL making a lot of investments, coming out with some good projects. We secured a large order from BSNL for their 4G rollouts in the rural areas. This was in December of last year. This was the single largest order win for the company in the company's history. It was about 2,500 crores. So I think all in all these new orders which we secured starting from last year, we closed last year with an order book of 4,000 crores. Normally, our order book has always been, if you look at the past trend, our order book has always been in the range of 1,500 to 2,000 crores. That's the annual number we've been closing at. But last year, thanks to these good inflows, we closed at 4,000. September, the quarter that just ended, we have closed at 6,000 crore. So
Yes.
obviously, we are seeing a sharp increase in the order book, and that is now starting to translate into the revenues, which we have seen in this quarter two as well as H1, where we've had a 67% growth in H quarter two and 50% growth in H1. So I think the trend looks very, very positive from here on. We have guided for 25% CAGR growth in our company for the next 3 years, which obviously is very, very conservative. We should do much better than that. So definitely, I think it's a good positive scenario to be in, both domestically as well as internationally.
Right. Indeed, I think that is the salient point here. Perhaps our viewers will be actually taking note of the order inflows. In fact, just in a single quarter, you actually have scored almost 1529 crores. Again, basically, if I'm reading the number right, and that basically has really sort of boosted the order flow. But also, the order pipeline is looking quite robust. Give us some color on the order pipeline also. This order pipeline is covering like what 2 quarters for the 4 quarters. how's the remaining second half looking to you on that?
Yeah, so in fact, the tenders which we have already submitted and tenders as well as inquiries, global RFQs, these total up to almost about 12,000 crores, where we have put in a bid and we are awaiting the results. In terms of future pipeline, it could be anything. I think projects which are already released, we are yet to participate, or projects which we have firm knowledge that okay, it's going to come up in the next 6 to 8 months. That itself, for our interest would be about 10 to 15,000 crores. So we are no, we see it's a completely as from the demand side, we see absolutely no challenge, whether it's India or globally. And what we've done is that because we spread ourselves so wide across the globe, we are seeing demand coming in from different countries. As I
Right.
mentioned earlier we used to see transmission demand mostly coming from developing countries. What now the trend what we are observing is that there is a lot of strong demand coming in from developed economies as well. So
And
countries like
when you say
Australia.
develop, it is more about Europe or more about North America?
North America is there definitely. Australia is there. Middle East region, which nowadays counts in the developed world. There we see a lot of positive demand. Europe is still, I would say, a little late to catch up, but it's expected. A lot of projects there, interconnection projects in between countries should happen. Though the things are a bit slow moving there. But yeah, North America, Middle East, and Australia, these are the developed geographies which we are really excited about in the next 4 or 5 years.
Right. And you're already present in Saudi, which is right now the biggest infrastructure market in Middle East.
Saudi, not yet. Saudi is something which is a market we hope to break into in the next few years. But yes, we are there in a number of other places in Middle East, in the
Sure.
UAE, in Oman, in Kuwait, as well as the larger MENA region, including Egypt as well.
So opportunities will actually keep coming in. So, but also one more interesting thing, perhaps I wanted to ask you, how's the sort of order book spreading now? Because you're more focused now into railways, like apart from the T&D transmission orders, but then railways also, telecom also. How's the railways sector looking to you? What is sort of client commentary coming up? Because investments are happening everywhere in that sector also.
Railways is a interesting sector for us. Although in the order book right now, railways does not play a large part for us because I think T&D and telecom have just seen such a sharp increase that even though railways has not gone down in terms of volumes, but as a percentage, it has been pushed down in the order. So the largest part is right now obviously T&D, then would be telecom, and then railways would be the last, probably the smallest part that we are right now catering to. There are interesting opportunities, but probably if you ask me immediately, I see more opportunities in T&D and telecom.
Okay, sure. And from the perspective of the current order book, like which is more than 6,000 crores, if I just look at the quarterly revenue now, actually it is almost more than double actually of your annualized revenue, and I think this order book might actually keep growing if the order inflows remain strong. From that perspective, like what's the usual gestation period of orders from the perspective of execution?
Yeah, of course, and that's important. What we have seen the trend over the last few years is again being driven since the demand for transmission is being driven by renewables. The gestation period of the projects are getting smaller because earlier thermal projects used to take anything between 4 to 5 years, so you had a lot of time for the transmission to come up. Now we have a situation where transmission is taking longer than the renewable projects. So there are a number of projects, not just in India, but globally, which renewable projects which are stuck because they do not have the necessary transmission evacuation in place. So there is a lot of pressure on execution now. We've seen project cycles shrink a lot. The current order book that we have, some of the projects are to be executed within 1 year itself. However, overall, as a mix, we have the order book that we have. If we are looking at a 1.5 to 2 year execution cycle. So I think it's a mix between domestic, global, etc. So I think 1.5 to 2 years is the order book execution cycle that we should look at.
That itself actually will tell our viewers that the revenue growth, just by the function of order book execution, actually is going to remain very strong as per your already given guidance. So perhaps that is something interesting. No, one more thing I wanted to sort of ask you regarding the finance cost. Is it more related to the working capital? Because we have seen the finance cost has gradually increased. Yes, could be a function of revenue, but please give us some color on that.
Yeah, so actually, in fact, if you compare the finance cost compared to the same period last year, we actually, on the percentage terms, we've come down. We were
Have
at
come down.
5%.
I agree.
Yeah, we were at 5% plus in H1 of last year. We are roughly at about 4.5. And keep in mind that this is with the background of rising interest rates. We're definitely paying higher interest rates this year than what we were paying last year. So despite that, due to the improvement in overall working capital cycle as well as the increase in revenue, as a percentage terms, the finance costs are coming down. So the absolute number really doesn't bother us that much as long as we keep doing better and better in terms of percentage terms.
Okay, and what's the usual EBITDA margins in your business? Usual
On a
blended
company,
EBITDA margins over a 3 to 4
yes.
quarter average.
Sure. On a company-wide, you can look at a 10% plus EBITDA margin for the company. Our engineering vertical typically does about anywhere in the range of 12%, and our infra segment does about 10%. PVC, which is a smaller segment for us, that is lower EBITDA right now because our brand is still growing. However, there we have seen some improvement in the EBITDA margin there itself because we've seen almost 100% volume growth in that business. Sorry, a 50% volume growth in that business in H1. So we are hoping to keep increasing the EBITDA there gradually and hopefully get to double digits as well in that business as well. So yeah, so on a company blended basis, you can definitely expect about 10% plus from the company.
Right. And from the perspective of this quarter, the EBITDA margins were 9.4%. Is it a function of revenue accounting or I would say cost accounting? Help us understand why the dip in margins for this quarter.
That typically would depend on the quality of contracts getting executed. Also, monsoon period is not such a great time for execution, especially in the infra segment. You have all your costs, but you do not have the matching revenue to match. So I'd say that yeah, that's just that doesn't that you the quarter EBITDA it's can be misleading, but yes, on an annual basis, 10% plus is definitely what you can expect from the company.
Okay. Okay. And also, please help us understand about the Forex element. How do you manage your Forex risk? Is there any hedging involved there? Because I was just seeing last time there was basically a Forex loss. This time, fortunately, there has been a gain. Is there some hedging involved, or it is largely a function of when the booking is happening?
It's largely a M to M, even whether the losses or the gains, these are largely M to M gains or losses. The company has a policy of because we have large amount of exports, and that is executable over some time. Some of those contracts can extend up to 2 years plus. So we do have a policy of taking a forward cover for our receivables, future receivables. And when the rupee depreciates, as what it did last year very sharply, it went from a level of 75 all the way up to 83. That is when we have M2M losses. So which is why you see last year, because of the forward hedges that we carried, we saw some M2M losses coming into our books. But then those are largely notional losses because then the realizations come at higher value later on when those orders are actually executed. So we follow a prudent hedging policy, and we're also refining that in line with the current times because earlier we did have a policy of 100% hedge because there was also forward premiums to be made. As an exporter, when you hedge forward, you actually would earn a significant amount of premium. Those premiums have now come down, because of the interest rate differential. The interest rate differential between US and India has shrunk. So I think that as a result, the forward premiums have also come down. So now we're going in for more modified, more evolved strategies like forward options, etc. But the idea is that we do want to protect the value at which we book the export contracts in. That is the central idea behind our hedging policy. And we follow a prudent policy driven by a committee. So I think that's really to it with our forex losses and gains.
Sure. One small question around the joint venture sort of profit accretion. Is it just almost a swing from the last year?
I lost you in the middle, but I'm assuming you're asking about the joint venture profitability and the how it's turned from a loss to a
Yes.
profitable
Yes.
situation.
Yes.
Yeah, so I think our JV partners from Israel, Metzer Class is a world-leading company in the field of drip irrigation, and we are very proud to be associated with them for this joint venture. I think the business just took some time in finding its feet. We launched this company just before COVID, and due to COVID, I think the first couple of years it was struggling, to find its market space, etc. But now that that's happened, the market penetration happened, and also during COVID, what we saw was that a lot of states prioritized spending on health and other matters that's apart from irrigation. But in the last year or so, we've seen that market turn quite sharply. And now a lot of states are once again investing in irrigation projects. So I think this is just a result of that. And the team is very efficient in this business. We've got a solid management team. And yes, so I think they're showing good results this year. And we're hoping for better and better results from them in the coming years.
Perhaps my towards my last questions. What are the plans? Are there any plans further to sort of diversify further? Like you're already supplying pipes, you have types of drip irrigations. Any further plans to diversify into agriculture, which remains a sort of sunrise sector from the perspective of investment from the government also, and also any sort of plans of any acquisition, perhaps in the near future?
Uh, in terms of acquisition, I can tell you we do not have any immediate plans. However, diversification is something the company is interested in. We see, at least in the opportunity in the sectors of power transmission and telecom, we do see a lot of opportunities for diversification because those are the places where our customers have high respect and high regard for us. We have been encouraged by our client base to come up with more products and service their new expansion projects. For example, in power transmission, we are very excited about the opportunities that are going to come up with the new smart metering project. We feel that this is going to be a big revolution in the overall. It's probably the biggest power sector reform that we've seen in our lifetimes, and that is going to really transform the power sector. So the government of India has a plan of installing 250 million smart meters across India. We hope to play some small part in that. The details are yet being worked out. So I think that's a very interesting sector going forward. Also, we feel that in the telecom sector, cabling, etc., those are very interesting opportunities that will throw up, with the last mile connectivity of cabling as more and more data is being demanded by individual households and even rural households. There is a lot of data demand coming in from that sector. So I think these are the areas where we see a lot of growth opportunities in India, and of course in our regular business, the way we look at diversification is market diversification because we want to keep adding 5 or 10 countries into our portfolio every year. So we're up to 55 countries now. Our MD has given us a target to going up to 200 countries in the next 5 years. So I think that's what really our idea is, that we should be geographically diversified, and of course, while in that journey, the product diversification opportunities will throw up themselves.
Okay, and perhaps just a reaffirmation of your point when you're talking about cabling and telecom, because you're not manufacturing it. So is it more about winning cabling projects where actually you're taking care of the cabling EPC activity? Like, how is that?
Yes, so I think in terms of we are doing a lot of telecom EPC projects already, and we have
Yes.
been doing cabling work through underground drilling method. We've been doing that almost for the last 15, 20 years, although it's been a very small part of our revenue. But again, these are opportunities which we believe are, because you're asking me about the future, so I see that these are very, very strong opportunities in the future where companies like us can play a major role.
Sure, Sharanji. I think you've been patient enough to give us all the insights, and I'm very sure our viewers actually would have really gained a lot from this. Looks like an exciting second half for you. Very strong order book, strong order inflows, very vibrant sectors right now. So perhaps a strong revenue growth is, I think, in the offing as we move towards the next few quarters. And with that, we would like to wish you a very happy Diwali from all our viewers and our side.
Thank you, and I wish you the same. Very, very happy Diwali to the entire team.
And thanks a lot for coming on our show. And with that, dear viewers, it's the end for the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.